America has literally built a system where being poor is more expensive. And nobody talks about how backwards that is. Like, if you're already struggling, everything costs more. On a bill you couldn't afford? Well, now you owe more.
Right now, in the richest country in the world, more and more people are struggling just to afford the basics. You open your bank account and there's a fee waiting for you. Step outside and there's gas and insurance. Walk into a grocery store and just a few basic items can take another bite out of your wallet. Then you get home the place that's supposed to give you shelter, and it may be the biggest bill of them all. All of it is closing in on every day of life in America. Every direction you turn seems to come with another cash register attached, while most people have only one paycheck trying to cover everything. When even the bare minimum cost of living can't be cut anymore, what do Americans have left to sacrifice? Today I'm going to show you why the cost of living in America is squeezing people so hard that many are getting fed up and starting to push back with their wallets. Watch this video before you become another victim of America's economic math. I don't know exactly when everything changed. I used to think a bank was simply where you kept your money. Now when I look more closely, sometimes it feels like if you want to keep your money in the bank first, you have to prove that you already have enough money. It sounds a little backward, doesn't it? One woman received a notice saying her account could be charged a maintenance fee if her balance didn't meet the requirements for a fee waiver. Listen to what she had to say.
Do you have $10,000 in your checking account? No, not your savings account, your checkings account. Please tell me why Bank of America just called to let me know that next month I'm gonna start having to pay a $24 monthly maintenance fee if I don't keep $10,000 in my checkings account. I shit you not. The guy who told me this on the phone, he literally giggled when he said $10,000. Like, besides the 1%, who has $10,000 just sitting in their checking account? Show yourself.
Hold on. I need to make something clear here. I understand that banks offer different types of accounts and each one comes with different requirements. I'm also not saying that every time an account balance gets low, every bank in America immediately comes running to take more money from you. But the logic behind it still makes me stop and ask a pretty big question. To avoid being charged more money, you first need to have enough money. Very considerate. When your account is healthy, you may qualify to have the fee waived, but right when the money starts running low, your paycheck hasn't arrived yet, and an unexpected bill just came through the system gently reminds you, oh, and by the way, here's one more charge. And this is where a few dozen dollars stop feeling small. Another woman described a period when her family was genuinely struggling. She had $55 left in her account. A $70 bill came through. She was short $15. Then a $35 overdraft fee showed up. So a $50 shortage became a $50 hole. Then the next paycheck arrived. Sounds like rescue, right? Not exactly. The first $50 already had to go toward filling the hole from the previous month, and then the next bill came due. She fell short again. Another fee followed. At one point she said her family was losing around $70 a month just to charges like these, and I think this is the most painful part. You haven't even made it into the new month yet, and the old month is already standing at the door with its hand out. And it doesn't stop with banking. That same woman said her auto insurance cost around $500 to $50 if she paid the full 6-month premium at once. But if she didn't have $550 available up front and had to break the payments up, the total, in her case, could rise to around $750. Think about that. The person who already has $550 available gets the opportunity to pay less. The person who doesn't have $550, the person for whom that $200 difference matters much more, end up having to choose the more expensive option. I don't need to imagine a room full of people in suits sitting around planning who they can make life harder for today. The system doesn't have to be that sophisticated. If you have money, you can pay up front, avoid fees, buy better quality products, and give yourself more options. Without a financial cushion, every small problem starts creating additional costs of its own. Can't afford a good pair of shoes. You buy the cheaper pair and replace them sooner. Can't afford paid parking. You take the risk of getting a ticket. Can't afford to pay something all at once. You split it into installments, and sometimes the total cost ends up higher. That's the contradiction that bothers me most. In America, money doesn't just allow you to buy more. Sometimes having money gives you permission to pay less. And unfortunately, we've only been talking about banks and insurance. Once you step outside, there's a whole line of smaller charges waiting for their turn. America is quietly charging you for almost every second you're alive. Yes, you heard that right. And the interesting part is that every charge only needs a label that sounds reasonable enough to make you think, okay, I guess I have to pay that. Service fee, delivery fee, convenience fee, parking, tip, insurance. Each one by itself doesn't look especially frightening. It's only $5, only $10, only 20%. But the problem is that they keep lining up waiting for their turn. And by the end of the day, every one of them knows exactly where to go. The same wallet. One woman eating at Olive Garden looked at her bill and noticed that the suggested tip amount made her stop and check the math. Take a look at what she
So
found.
I'm over here at Olive Garden, and that's probably the first problem. But anyway, I'm over here looking at my bill, right? So here is my total check, $33.30, and I was going to leave her 20%. It automatically went to 20%. 20% of $33.30 is not $8.95. What is happening here? 20% of $33.30 off the top of my head should be $6.60 whatever, 666, right? Oh, that's a horrible number, but anyway, that's what I'm calculating in my head. Why is it populating 20% all of a sudden, automatically at $8.95? So they're either trying to cheat people because they know people normally do 20%, and I don't mind giving extra tip. That's not the problem. The problem is get your calculator right, Olive Garden, because don't be trying to scam people. Because a lot of people don't calculate, they just go right. They just scroll to the amount they want to do. So that is not right. Those calculations do not add up. And I keep seeing other people talk about this at other restaurants. Like, what is going on? They trying to scam us all now? I don't like it.
This may be one of the most ridiculous costs I've heard about. A 20% tip is already not a small number. And before I leave a tip, I also have to pull out my phone and check whether 20% is actually 20%. I came to a restaurant to have dinner, not to pick up an unpaid accounting shift. I'm not claiming the restaurant intentionally calculated anything incorrectly. There could be tax fees or some other detail in how the system calculated the number that the video doesn't show us. But the fact that a customer has to stop and ask, where did this number come from, already tells you how exhausting paying for things in America is becoming. And tipping is where it gets especially interesting. At full-service restaurants, roughly 15% to 20% has long been a strong cultural expectation. In theory, it's a gratuity. Sounds voluntary. But try finishing your meal looking at your server standing there and pressing 0. See how optional it feels then. On a $50 meal, 20% adds another $10. An $80 bill adds another $16. If a family spends $120 on dinner, that's another $24 before they even leave the table. 20% sounds fairly harmless until it lands on top of a bill that wasn't cheap to begin with. And I'm not blaming the servers. They have rent, groceries, insurance, and dozens of other bills too. For many workers, tips are a very real part of their income. That's why the part I find darkly funny is this. The customer thinks they already paid for the meal. The employee still needs the customer to pay extra to make a living. And the business in the middle seems perfectly comfortable letting those two sides work out the awkward part themselves. Pretty efficient. Sell the meal, cover part of the labor cost, and let the customer take the guilt home. And tips never travel alone. One young person in a source we looked at said a night out could cost $100 to $150. One drink after tip could run around $20 to $25, and that's before Uber. Someone else in New York tried to have a cheap night out, barely bought anything, and still ended up spending around $60. Then people act surprised that younger Americans pre-game at home, meet up at a friend's place, or simply stop going out. I don't know. If one fun night ends with you opening your bank account the next morning and seeing $150 disappear, your friend's couch suddenly starts looking a lot like the VIP section. But at least restaurants are something you can cut back on. Uber gets too expensive. Stay home, delivery costs too much. Pick it up yourself. Car insurance is different.
Somebody tell me, how is this legal? How can Geico raise my insurance from $289 to $436 without me getting into an accident or speeding tickets, anything? They could just raise it that high. How is that legal? That's crazy. Look at that. $289 to $436. Somebody explain this to me. This is crazy. Geico is out of control.
Okay. According to this man, no accidents, no tickets, same vehicle, but his premium still increased significantly. I understand that insurance companies don't look only at you as an individual. They also consider repair costs, accidents in your area, parts, prices, the severity of claims, and all kinds of other risks. And I understand that calculation exists. There's just one interesting thing about that math. The risk can be calculated across an entire region, but the bill always managed to find your exact home address. And this is where all those small charges start becoming suffocating. There's a reason for tipping. There's a reason Uber costs what it costs. There's a reason for parking fees. There's a reason for insurance. But Americans don't pay for each explanation out of a different wallet. Every one of those costs comes out of the same paycheck. $5 here, $10 there, 20% at the end of dinner, a few dozen dollars to get home, then a few $100s for your insurance at the end of the month. None of those expenses looks capable of crushing you by itself. The problem is that they never show up by themselves. And we still haven't reached the two things that are almost impossible to cut out of life: food and gas. As you already know, the past few months have brought major disruptions around the world, from Europe to Asia. Energy, transportation, supply chains, everything seems to move with every new headline. And of course, the United States isn't outside that story. Actually saying we're outside of it would be a little generous. We're standing pretty close to the middle of the stage. But I don't want to turn this into a lesson in geopolitics. What I care about is much simpler. Every time the world shakes, ordinary Americans tend to feel it in two very specific places: the gas pump and the grocery checkout. Look at this man. He just spent $116 filling his tank, then decided to keep making deliveries until he earned back the money he had just poured into the tank.
I just spent $116 on gas. Now I'm doing Uber Eats until I make it all back. Here we go. So the price of gas right now where I live is $3.96 per gallon. My wife has an SUV to drive our 4 kids around, and to fill the tank of gas today, it was $116. So I'm gonna be doing Uber Eats until I make all that money back to cover the tank of gas. I just turned on the app. I already just got this order. I'm gonna decline this one. It doesn't look good. Here we go, $13.23 for 6.2 miles. I'm gonna go ahead and accept.
I'm sorry, but this scene is almost perfect for describing the cycle a lot of people are caught in. You need gas to go to work. Gas is so expensive that you need to work more to earn back the money you just spent buying the gas you needed to go to work. I'm not sure whether to call that an economic cycle or a very expensive joke. Of course, $116 is not what every American pays to fill a tank. Different vehicles, different states, different types of fuel, but the frustration behind it is very real. The BLS reported that gasoline prices in June 2026 were 26.7% higher than a year earlier, while daily data showed that the national average had repeatedly approached or exceeded $4 a gallon this year. And here's something people who live in places with good public transit can sometimes forget. In large parts of America, a car is not a luxury. It's how you get to work, how you take your kids to school, how you get to a doctor's appointment, how you buy groceries. So saying if gas is expensive, just don't buy it is about as useful as saying if housing is expensive, just don't live in a house. Very helpful. At least you can try to drive less. With food, I still haven't figured out how to stop buying it while calling that a healthy financial strategy. And right when people are already watching every dollar on the receipt, we start seeing videos like this. A shopper named James Rigg picked up a package of chicken at Walmart. The label said 4.66 pounds and a price of $19.20. He put it on a scale inside the store. The scale showed about 2.37 pounds. No, hold on. Higher meat prices were already enough to bother me. Now, before buying chicken, I also have to stop by the produce section and weigh it myself to make sure the package actually weighs what the label says. Apparently, my next Walmart shopping list is going to include my wallet, my phone coupons, and a pocket scale. But again, I want to be clear, I'm not saying Walmart intentionally deceived customers. The person who posted the video made that accusation. While incorrect package weights can result from labeling or production errors, at least one supplier later acknowledged a labeling error involving some products, and the affected items were removed from store shelves. What interests me is something else. An ordinary shopper now has to ask whether they're actually receiving the amount of food they just paid for. And if you think these are just a few dramatic videos, cherry-picked for effect, open TikTok, Reddit, or Instagram right now, search for egg prices, Walmart receipts, gas prices, underweight meat. You'll find a long line of people holding their phones up to a watermelon, a carton of eggs, or a shopping cart, and asking some version of the same question. Why am I paying this much and taking home so little? Social media is not a national statistic, so I'm not using a handful of clips to speak for the entire country. But when a survey of 4,100 Americans finds that roughly half say they're struggling with everyday necessities such as food and gas, while 95% say the United States is facing an affordability crisis, I think this has moved well beyond a few shocking receipts on social media. high tips. You can eat out less. Uber gets expensive. Stay home. A service raises its price, cancel it. But once you get here, the exits start disappearing. You have to eat. You have to get to work. In many parts of America, to do the second one, you have to bite at the first thing that gets you there gas. That's when higher prices stop being merely annoying. They start deciding what people eat where they go, and which parts of their lives they have to cut away. And if food and gas already make you feel boxed in, the next bill is the one that really closes the door: housing. If I said America is a country where it's difficult for people to own a home, that would actually be a little unfair. Because once you look closely, buying a home is giving people headaches almost everywhere from Europe to Asia. Where does the down payment come from? How much do you borrow? Do you pay it off over 20 years or 30? Just thinking about it is enough to raise your blood pressure a little. But in America, I get the feeling the problem has gone one step further. Because buying the house isn't necessarily the end of the story. Sometimes that's just when you start figuring out how to keep the house you just bought alive, but fine. Buying a home is too expensive, so you rent. Sounds reasonable. No roof repairs, no 30-year mortgage. If something breaks, call the landlord. It sounds much less stressful. Until you look at the math. In 2026, a full-time worker needs to earn about $34.73 an hour to afford a 2-bedroom rental at what is considered a reasonable level, meaning no more than 30% of income goes toward housing. Meanwhile, the average renter earns only about $24.84 an hour. The average fair market rent for a 2-bedroom home has already reached about $1,806 a month. Not a penthouse. No rooftop pool. Just 2 bedrooms. We've reached the point where a modest apartment requires a salary that is no longer modest at all. And if you're living on minimum wage, the math gets even more entertaining. There is no state where someone working 40 hours a week at the applicable minimum wage can comfortably afford a 2-bedroom rental under that standard. Some calculations show that a minimum wage worker could need to work more than 100 hours a week. There are 168 hours in a week. Subtract sleep, eating, showering, commuting, and then try squeezing more than 100 hours of work into what's left. Maybe the apartment comes with one special amenity. You can afford the rent, but you no longer have enough time to actually live there. Okay? So just rent. But let me add one more warning. These days, before many people even get the keys, they may have to go through application fees, credit checks, rental history checks, and digital tenant screening systems. There are cases where the data is wrong, outdated, or belongs to someone else entirely, and yet that the renter is the one who has to run around proving it. I have to admire the logic. You pay money for a system to decide whether you deserve to rent a home, and if the system gets it wrong, you're still the one who gets the extra work. Technology really has made life more convenient. It's just not always clear who it's more convenient for. At this point, someone is going to say, "Enough. I'll just buy a house." I understand. At least then the house belongs to you. But the mortgage is really just the price of admission. After that come property taxes, insurance, utilities, HOA fees. If you have them, a broken air conditioner, a dead water heater, and a leaking roof. When you rent, you call the landlord. When you own the place, the good news is you are the landlord. Even people who have completely paid off their mortgages can still spend hundreds of dollars every month on taxes, insurance, utilities, and other housing-related costs. You may be done paying for the house, but the house may not be done charging you. I'm not saying buying a home is a bad decision. Home ownership can still help a family build wealth and create long-term stability. I just think we need to stop confusing being able to buy a house with housing has become affordable. Renting is expensive. Buying is expensive. And at this point, Americans no longer feel like they're choosing between a cheap option and an expensive one. They're choosing whether they want the bills chasing them as a renter or as a homeowner. And that's when I start asking a different question. After taxes, housing, insurance, transportation, and healthcare, and all the other mandatory expenses are paid, how much financial security do Americans really have left compared with people living in other advanced economies? At this point, someone will probably tell me, okay, everything in America is expensive, but at least we don't get taxed like Europeans. I understand that argument. Show an American the paycheck of someone in Germany or France, and the first reaction may very well be, wait a minute? What is the government taking all this money from me for? And to be fair, in many European countries, income taxes, social contributions, and consumption taxes really are higher than they are in the United States. I'm not going to sugarcoat that. Taxes are still money leaving your pocket. But this is where I think we often stop doing the math too early. Europeans pay their taxes. Americans pay their taxes and then open another stack of bills. Health insurance, Out-of-pocket costs, childcare, a car insurance, college tuition, student loans, and all kinds of services that in some other countries are funded more heavily through the taxes people already paid. So I'm not that interested anymore in asking who pays less in taxes. I want to ask a more uncomfortable question. After taxes and everything else you were required to pay have been taken care of, who has the bigger financial cushion left? Healthcare is probably the clearest example. America is not short on money in its healthcare system. In fact, the United States spends more on healthcare per person than any other major developed economy. But for many families, health insurance is still closely tied to employment. Losing your job does not automatically mean losing your insurance. There are other options, but it can turn a career shock into a healthcare and financial problem almost immediately. I've always found that a little strange. We spend enormous amounts of money treating illness, yet sick people still have to spend a lot of energy worrying about how they're going to pay for that treatment. Then there's time. In many European countries, several weeks of paid vacation each year are protected by law. In the United States, federal law does not require employers to provide paid vacation. Yes, in some industries you can earn more here. But if the trade-off is fewer days off and greater dependence on your job to keep your benefits, then I think time should count as part of what we mean when we talk about being wealthy. I'm also not going to turn Europe into paradise. Taxes are high. Consumer prices can be high. Wages in many industries are lower than in the United States. Some healthcare systems have waiting times, and stronger worker protections come with trade-offs of their own. You can land in Copenhagen, look at the bill after dinner, and immediately start missing home. But the difference worth thinking about is how the two systems distribute risk. Many European countries take more money up front through taxes and use it to build a larger safety cushion. America lets people keep more up front, but then a long series of separate bills arrives afterward. Neither system is free. One sends you more of the bill up front through taxes. The other lets more of the bills arrive later, and sometimes they arrive exactly when you're at your most vulnerable. After everything we've just gone through, I don't think the problem is one bill becoming more expensive or one product costing a few dollars more. It's the feeling that everywhere you turn, something is waiting to take another piece of your income. The bank has fees. Eating out comes with tips. Your car needs insurance. The grocery store has food prices. The gas station takes its share. And finally your home, the place that's supposed to give you the strongest sense of security, becomes the biggest expense of all. Americans have already cut what they can cut. They eat out less, drive less, cancel services, hunt for discounts, keep older cars longer, but you can't save money by deciding not to eat, not to go to work, or not to have somewhere to live this month. And that's what is making people so fed up. It's not necessarily that they don't know how to manage money, it's that less and less of their money is actually left for them to choose how to spend. If you want to keep looking at America through what people are actually experiencing in their everyday lives, subscribe to the channel. I'll see you in the next video.